The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we had a tough day to the downside in the cattle futures. Feeders lockdown limit with pressure at live cattle as well. On the grain and oilseed side, minimal losses there. More so in the wheat than in quartered soybeans, but still down 1 to 2. We got a big USDA report coming up on Friday. How are yields looking? Weather for the finish, much more. Let's talk through things. Joining us now for market analysis, Corey Bratlin with agmarket.net. Corey, welcome back to the show. How are you, sir?
Doing good, Jesse. Good to see you again. So everything's doing well up here in South Dakota. So.
Yeah, good to connect with you. And I'm curious, we were chatting a bit off air. I mentioned I was back home in northern Iowa here this past weekend, got to see how crops are looking. And for the most part, good looking crops. Southern rust, an issue, of course, though, we've been hearing about. You and I were touching on this a bit. What's the latest you're hearing on that? How are crops looking in your area in South Dakota? I mean, what are you hearing just in terms of this yield and this finish to the 2025 growing season?
Yeah, a lot to talk about there, Jesse. Yeah, first off, here in South Dakota, our crops, I'm kind of in the northeast part, a little bit north of Highway 14. In our crop, we need some time. We kind of dodged the frost bug here earlier this week, and which is very, very good on our nature that we just needed to miss that. So we need to get to October 1. Crop is still pretty green. Silage is just starting to come off. Haven't heard any estimates as far as the yields. They just started, on Monday, yesterday, this week. So far as the rest of the crop, that what we're seeing kind of across the countryside, yeah, you touch on it. Southern rust is kind of tearing across Iowa here, and it's nothing it's new. I mean, we've talked to customers all summer long. Some guys have elected to spray fungicide for it. Some didn't. Some did some check strips. And so far, what we're seeing, those that sprayed to those that didn't, it's upwards of 30, 35 bushel an acre yield difference. So, and it's something that's really gonna, I think, kind of take a toll on the overall Iowa yields and gonna keep this yield down nationally on this corn. And so a combination of this rust, shutting down and this corn dying to the early planted stuff to maturing early. So we've got harvest kind of taken off in Iowa here this week, which is a little earlier than normal, but it'll be got some good weather here. It looks like the next 7 to 10 days at least to get going.
Thinking about southern rust and any of the other disease issues that are out there, you mentioned the frost maybe did hit some areas here. We're still kind of assessing that, but I just have to wonder if all of these pockets of issues and a dry finish here to the growing season for many areas, how much of the top end of the yield does this take off? And we got a big USDA WASDE report on Friday. I don't know if USDA is going to make big adjustments with this report, Corey. I mean, maybe it's still too early to tell in terms of the impact of some of these issues out there. I mean, what's your thoughts heading into Friday's report?
Yeah, Friday's report, the USDA will actually have the boots on the ground. They'll be out in the fields, kind of pulling the ears back, counting plants, counting pods in a 3-foot square. They're going to be counting kernels. What they will not do in this report is check on the weight of the ears. That'll be next month in the October report, I believe. So, I do look for them to cut the yield back, but I think it will be very incrementally. I think, big thing to take away is the trend that they do it. And like you mentioned, the dry finish, we have that's eastern part of the Corn Belt. We've got some of our partners in our group here at agmarket.net. Matt Bennett, he was in an area there in kind of south central or southern or central Illinois that just flat out missed some rains at the end of the season. And, it's going to take a toll on the corn finishing. It's going to take a toll on the soybeans filling those pods at the end. So overall, yeah, I think the market is generally looking for a lower yield. Now, will the USDA give us as low a yield as what the market is pricing in? Probably not. I think they'll probably come in here. I think at trade guesses they're looking for about a 3 bushel or so yield drop. So if they're looking from 188.8 down to 185.7, I think is the average trade estimate. So and that seems to be about right. It kind of seems to be the going rate for the USDA to kind of take things down incrementally. And I got to think that if we see a decline in yields this month, we could see that again happen here in October. So.
Well, thinking about this, and maybe we look at the markets here and some of the technical picture. Let's talk corn first. I mean, corn's felt like it started to chop around a bit in this recent range. You got D's corn, kind of that 420 area on the board. And I know the cash side of this is a different conversation, but just in general, when you look at the technical picture in corn, what stands out to you? What should producers be thinking about with risk management right now?
Well, that August 12th report, when we had one of the most bearish reports we've ever seen on corn, we didn't really get beat up terrible on that, and we rallied out of it. So we kind of feel like that August 12th report, we put those down around 392, give or take, on the December contract. Kind of feels like that could be our low benchmark for the year. Okay. Now, since then, we've rallied back up. We're trading around this 420 level. This week, even last week, we bumped up into this 424 3/4. We've hit it a couple times. And if you look on a chart, if you're a technician, we've got a downtrend line that we've had since back in April, and we have been playing playing on both sides of that back and forth. We popped above it yesterday. Now today we kind of went back down closer to that 4. It comes in right around 420. So here we are kind of playing leapfrog with on the corn. So this is kind of where the bulls and the bears are kind of really duking it out. And I got to feel like that if we get into, corn futures get up into this 425 to 430 level, not in my area, but across Iowa, Illinois, we're going to have some guys going to be knocking on the door with some $4 cash corn for them for right off the combine into town. I think that maybe, initiates some sales. So, but I think with the yield and the way the crop finished with the disease issues, that we probably got our low scored. It feels like, anyways. I guess we won't know until after harvest. But I think a producer could be looking for some type of reownership, I think, on pullback. So we kind of went from this downtrend market to maybe now we can almost buy the dips type sentiment here in the markets.
How about over in the soybeans? And again, it's the same thing. You look at a board price that's in the mid 10s, cash basis though. A lot of the stories and talk of 8s, in your area up into North Dakota and more here with all of the export worries with China, et cetera, et cetera. And I've seen some comments from folks with the public who, they don't understand that the board price is one thing, but the cash price is a different thing. Yeah. And I know for producers, a lot of this on the soybean side is very frustrating right now. So same question, what are your thoughts risk management wise when it comes to beans here, Corey?
Yeah, similar on corn. I think the crop yield optimist is still pretty optimistic on soybeans. Okay, we do have some disease problem. It doesn't seem not quite as bad as what we're seeing in the corn market. Okay, and it seems to be what I would say is probably a more normal year. We have some SDS and sudden death. We have some white mold. That's kind of normal. We have that each year. Okay, but so the yield is still optimistic in there, but it's probably likely going to come down with that eastern part of the corn belt. Getting very dry on us. Probably going to abort some of those top pods and maybe not fill them. So, we're the trade's looking for about a half a bushel decline in the yield, and that's to be expected. Now, cash wise, so if you look at the market, there's really good support here around this 1025 level. We've hit it several times the last 7 days, trade days here. We keep bouncing off, but our upside is limited. Like you said, we don't have a trade deal with China. We don't have any details out about our SREs and the RVOs with the 45Z program yet. So that's kind of limiting our upside. And that is also causing cash basis levels, for especially those here in the Dakotas that are tribute to the P&W program. They've got such a big program on for corn that that's taking up a lot of the space, but we just don't have those soybeans to sales to China either to kind of compete as of this time. So that's causing, some horrific basis levels in our area. I mean, we got places in North Dakota that they're not going to take beans. They're just, they're, instead of paying, $1.50, $1.70 under basis, that's negative now. That's take your Chicago price and take $1.50, $1.70 off. That's the cash price that some of our folks are looking at. So beans are going to get put into a lot of more beans are going to get put in the grains. There's big carries in the market. The processing margins are still good. So, once the bin doors go shut, harvest wraps up, we do expect these processors to start sniffing around looking for some beans and probably narrowing that basis up. So this is a year, I think, on risk management to, sell that carry or buy some puts to get that floor needs, but play the basis game and lock that carry in, and it'll be a lot better than accepting what we have here at harvest time.
Corey Bratlin with agmarket.net's our guest analyst here today on Market Talk. I do want to make sure we get to the cattle, but I should ask you real quick on the wheat side of things as we wrap up our grain conversation. A little more modest pressure in wheat futures on Tuesday. Anything big for you when you look at all three exchanges? Anything you're watching here this week, Corey?
Wheat for the most part has been trying to carve out a bottom here. I think, corn, until we get corn to actually move up, wheat's going to continue to kind of grind out. We are seeing some strong export sales. We need to continue to see that. The dollar index did break back down in this 95.50 area. So 97.50. That's going to keep us a little bit more competitive here. I think it was early last week. We got a little bit uncompetitive in the market. So it just, wheat market's just going to be a grind in here. I think your downside is pretty limited, but boy, until we get above, the 20-day moving average, get like Kansas City wheat up above 516, 517, we're going to struggle in here.
Let's talk livestock. Cattle, feeder cattle, a little bit lower futures on Tuesday. Fats weren't too far behind. What happened on Tuesday? Is this more of a technical move? Is it something else? Did I miss a news headline, Corey? I mean, what did we see on Tuesday?
Yeah, I've been searching the wires here today, and the only thing I really saw was, late last week, we had 3 down days. We finished last week down 3 days in a row. And it's one of the first times we've seen cattle down, live cattle and feeder cattle down 3 days. And then yesterday, Monday, we're a little choppy. We start off lower, come back up a little bit. It just wasn't a very strong. Like the market just feels a little bit tired in here. Now, I think President Trump over the weekend made a comment about maybe beef prices are going to be coming down. And then, today I think we had a weaker job number. So there is a little concern out here that maybe some of the consumer spending might be starting to lighten up a little bit. And then probably the big thing, what I noticed is we got underneath the 20-day moving average on live cattle and feeder cattle. And when we're at, Jesse, $3.60 feeder cattle, we're at $2.40 live cattle. We're going to see some corrections, and at these high elevated prices, they're going to be severe. And down limit on the feeders here today. Live cattle down 5.5 on the October contract. The deferred's down, $6 plus. I am hearing though that the feeder cattle were synthetically traded late in the day, like another down $3. So I think it's just we're just due for a correction. And when we're talking these high numbers, 5-10% correction, it's a lot of money. It's big swings.
Now, I know, though, too, we haven't really seen much action in the countryside yet this week. It's early in the week. And, it's one of those things where we see a big move like this in futures on Tuesday, but what happens if cash stays steady or, cash kind of does its own thing? Could we see futures just roar right back later this week? I think that speaks to, we've had this for so many months, just this overall volatility in this cattle complex, Corey.
Yep, we have, and that's what everybody's gonna be anxious to see what the cash price does. It was kind of steady, maybe a little weaker last week, kind of for a change. I am hearing the Packer did get a few more had bought here with a little bit of time, so that may warrant this being this correction lasting a little bit longer. I also kind of noticed for the first time late last week, some of the feeder cattle auction barns were a little bit cheaper than were more steady versus $4-8 higher we saw day in and day out. Today I did see the box beef at this morning I think was maybe 10 cents higher on the select or on the choice, and then select was down a little bit. So So, or actually, I think I get those flip-flopped around. So, instead of seeing box beef being up like it has been, we're starting to see things maybe stall out a little bit. So I think that's more than anything. So we'll see if we do get higher cash, like you allude to. Yeah, I would expect this market to kind of come ripping right back.
Yeah, choice was down 10 cents. Select was up 2.99 on the day, midday anyway, Tuesday. So, yeah, it'll be interesting to see how that goes. That's going to speak to consumer demand as well and those types of things. That's stuff we've been talking about a lot here on the show. How about any spillover into the hog complex? That was much quieter on Tuesday. Anything stand out to you when you look at the technicals in lean hogs right now, Corey?
Yeah, just we got the Goldman roll going on here, so that they're busy getting out of their October contracts, getting into some of the deferreds. Now I think just with the cattle market at these high prices going lower, yeah, it's naturally going to pull all meat complexes a little bit lower. Demand still looks to be pretty darn strong for hogs. Numbers I'm kind of hearing out there are getting a little bit softer. So I think the hogs are kind of like the beef, and that you get a little correction in here. I still think in the big picture we've got some more possibly higher prices coming. So
how about looking at the outside markets, maybe in the energy complex? Any notes for you in energies for this week, Corey?
Yeah, I mean, crude oil is down here and around, $61, $62 seems to be some pretty good support. Tested it here a few weeks ago, held it. We had a little escalation over in the Middle East here yesterday or last night in the place where some more bombings took place. So that kind of seems to be adding a little bit of premium. But overall, I mean, I think you got good support on crude oil around this $61 to $62 range. Upside, maybe $65, $66. So that's kind of the range I think you're going to continue to see that crude oil trade in.
How about in the financials as we look at things like the dollar and the Dow and gold? We'll throw that in there too, et cetera. I know we've got various jobs data that's coming out here this week, things like that. Anything big for you in the outside markets this week?
No, just, stock market continues to push higher, which is continue to build that confidence here in the consumer. The dollar index, I think, will, if we kind of got back down to 97.50, maybe a little bit less than that here this morning. If that looks a little bit vulnerable, that there might be a little bit more downside coming in a dollar, and for us in the ag community, that speaks volumes that usually makes us a little more competitive. So that will just help our demand in the big picture on this dollar. So it looks like it's maybe some more downside coming on the dollar.
All right. Final thoughts from you, Corey, as we wrap up here today. Anything else you would mention or reiterate to folks just as we watch this market trade this week?
Yeah, just as our folks are getting going in harvest, especially down in Iowa, just let's take our time, be safe out there. It's going to be it's a big crop. We're talking yields getting smaller. It's still going to be probably a record crop. So we got a long ways to go. This is just the start of harvest. So everybody be safe out there.
Absolutely. And I know folks have questions. Maybe they're in the cab of the combine or the tractor. They want to talk through some marketing strategies and more. They could reach out to you guys there at agmarket.net. You got a great team, a lot of resources available to help producers, right, Corey?
We sure do.
Yeah, just reach out, agmarket.net for more information. Corey Bratlin, always good to hear from you, sir. Thanks for joining us here on Market Talk. Have a great week. We'll talk to you again soon.
Sounds good. Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.